derivative platform side. So I'm sure that the takeaways would be very valuable for all the audience, and I'm sure that all of us will learn from each other because this is an industry where, irrespective of the number of years that you put in, we learn every day. And thank you, CII, for bringing this one more opportunity of mutual learning and sharing the insights and wisdoms that the practitioners have culled over the last couple of decades of understanding this space. So, without much delay, I will just first introduce the three panelists here. My introduction is very simple. I work with NCML, and I look after the businesses, and I serve for all the value chain needs of the agriculture commodity industry in the post-harvest segment. The three panelists, starting with Vipin Gupta, who needs no introduction to the soybean industry or the edible oil sector. He has been a participant and practitioner for almost now close to 3 decades, as we have seen him. And he heads Louis Dreyfus Commodities at its India, CEO of the India business unit. And he has been an avid trader, buyer, seller, value chain manager, risk manager, everything he has seen and witnessed and learned in the edible oil and some other sectors like sugar. I've known Vipin for long, and I can vouch for his astute understanding of the supply and demand dynamics in most commodities, and soybean in particular, because he's handling the book directly. The second panelist also has been known to the industry for quite some time because he has been interacting with us from his NCDX days, as well as he started participating as a participant, both as buyer and seller. So Prashant Reddy heads the entire operations, supply chain, and risk management of the edible oil book for ADM India. And he has joined us back in India recently after putting in a solid 3-year stint in Switzerland. I'm sure that he has gathered enough international understanding to share with the participants and share insights on that. So welcome, Prashant, and we look forward to hear from you. I'm sure that you will amalgamate your international exposure with your domestic experience that you gathered in your NCGX days and now in ADM. The third and very solid participant we have, who is helping us hedge all the risk on the derivative exchanges, who is the product development and product management in NCDX. And for the last 15 years, NCDX has helped the entire ecosystem in managing the risk. Either it is the soybean directly or the soybean oil component. So two decent products has been very liquid and very dependable for the value chain participants for the risk mitigation. So I'm sure Kapil will share his insights in managing and the exchange ecosystem and making it a partner for the value chain guys for the risk mitigation requirements of the entire value chain. So this webinar would be, I will first invite Vipin, who will share his insights on the international S&D. And then I would request Prashant to dovetail into that understanding using the domestic understanding. And then we will move to Kapil to share his understanding how in the international and domestic scenario, where does the exchange play a role for us to hedge our risk. So over to you, Vipin, and look forward to see your presentation.
Thanks, Anupam. Thanks for the lovely words for introducing me. Thanks, Yaya, for giving me the opportunity. Happy to be among the esteemed panelists, Prashant, Kapil, Anupam. I've been working with you for quite some time, all of you. Without taking much time, I'll just probably jump into my presentation. As Anupam covered mainly the international S&D, I would restrict most of my discussion around that, and then probably come to a few points that I see are important from India point of view. Rolly, is my screen visible?
Yes, sir.
Yeah. So first we see how the soybean crop outlook is there as per the latest, and for this presentation I'm using USDA data, so I'm giving due acknowledgement to them. I'm not using data which we have our own data as a trade house that can be debatable. So I'm sticking all my conclusions based on the USDA latest data. So if you see that there is a big bounce back happening on soybean crop for the year 2021. We are looking at a crop of 363 million metric ton, which is almost a 10% jump from last year, which was an aberration because of conditions in US. So US soybean crop had dipped last year from 121 to 98. Now it's again looking to bounce back, not to 121 levels, but approximately 113 million metric ton. And we see a definite improvement in Brazil and Argentina, together about 10 million tons. But these are yet the projection. We yet need to see where we end on the crop. But whether it's 363 or slightly lower number, point is we have sufficient beans around in the world. So we don't see any shortage of beans or any runaway on the bean prices unless something goes wrong in weather, either in the US from now to the harvest or for the new crop sowing season in South America. As for the crush goes, we don't have a matching rise in meal values. We have 2-3 years of stagnant crush, 294 million ton. Now we are going to 116 next year, which to me is a slightly higher number given the COVID situation that the world has seen. So a slightly, I would say, slightly optimistic number at 316. I would like to peg it more closer to probably 310 million metric ton because demand for meal is expected to remain sluggish. Uh, Consequently, once we have that crush, we are looking at a soybean oil production of 59 million metric ton, which is about 2 million metric ton higher than current year 2019-20. But point is, demand is by 2 million metric ton, and these are the USDA projection. I am not sure what palm number they have taken, but the way palm prices have risen and the gap between palm and bean oil, what we usually call POBO, has shrunk. I'm sure this 58 number can exceed. So you are looking at a situation where probably bean number is slightly optimistic, bean and the crush number, and oil demand number is slightly, I would say, on a lower side. So actual S&D as we see can be a bit trickier, a bit more tighter than what USDA suggested in their latest report. These are my personal views. We will see how how it will evolve. But looking at the palm evolution and the palm tightness that we are seeing, and the fact that palm and soybean prices for Q4 and then Q1, Q2 are getting very, very narrow, we are confident that we'll see more of bean demand than probably what we are seeing here. Stuck in a very after the 2013 drought that we had seen, come in a very range. If I take a midpoint, it's about 10 to 15% variation on each side, and that's largely is a sign of ample global bean supplies. So until unless we see a major weather concern anywhere on the globe, largely US from now till probably September, October, and then probably later half of the year in South America, this band should not be broken. It market needs sufficient reason for this band to be broken, which drought can be one of them. So far, there are no expectation of that. But this being a La Nina year, if something goes majorly wrong in South America, we have seen us probably close to 7-8 years of very, very good weather in South America. So if there is any weather disruption in South America, then we'll see this band getting broken. Otherwise, we would expect prices to remain within this very narrow band that we have seen market is trading for last 4-5 years. Now, if we look at a global supply situation and it tells us that it's not very loose, it's not very tight, it's just about the way it's there for last 2-3 years. Now, what it means to India. Now, when we talk about India, we always tend to compare ourselves with China. And China, as we know, has emerged as the largest crusher of soybean in the world. Today, it's crushing close to 90 million metric ton, and it has emerged as the largest crusher. So, is this model applicable for India? Can India also follow a strategy where we let oilseed come in rather than we start building or crush? As I see, India is ready for this strategy because we are net it goes to livestock. It may not hold true for human sector, but for livestock sector, definitely we are protein surplus. So unless we have avenues for meal export, this strategy will not work for India. And if you are exporting meal to a large extent, this policy does not seem suitable for India. Second, if we see either they are in government hand in China or into hands of Argentina farmers, and why the Argentina farmers are using it as a dollar denominated holding with the kind of forex situation that they are seeing, they are selling it very close to what amount they need to monetize. Is that true for India? No, I don't think Indian farmer needs to hold. But if we are looking at a bean crop size, with I think Prashant would elaborate more, but if we look at USDA data, they're talking about 10.5 to 11 million tons of crop for India. But challenge is how do we crush this bean? And if we are not crushing this bean and selling meal, who carries it? To me, it's a question which most of the time we sort of avoid because it's a very crucial question and there are no comfortable answer. We don't know whether and we are trying to situation in India. And on the other side, we are facing an issue where we might have a oilseed crop which we are not able to crush and probably carry it into next year, and without marking market paying adequate carry for it. So that's a dilemma which we all of us need to resolve before we can expect oilseed cultivation to really boom in the country. Now, if we look at what has happened in India for this particular year, so the impact on oilseed cultivation, I would say, agri, as we all know, has performed much better than all other sector during the COVID. There can be multiple reasons for it, but if I look top two, three reasons, as per my understanding, one is obviously monsoon has been better. It came earlier than usual. It has been excess, though there's a wide difference across the geographies. But overall, for a country, still, I think latest report is about 2% positive. So the good monsoon meant we had earlier sowing of soybean, which is good for the yield part. And even if we see the data, there was a marked increase in oilseed area under cultivation, but large part of it was the timing effect. But our sense is still we should have about at least 10% more soybean area under cultivation. Better labor because we saw the labor migrating back into rural areas from the urban areas. So labor availability during the key process of sowing was good, and the fact that there's a lot of money that farmers have received EBT, that money is getting its way into better inputs, be it seed, be it fertilizer. If you're talking to the industry, whether it's seed industry or other agriculture inputs, they are pointing to a better demand this year from the rural side on the agriculture input. That should mean a good production. Obviously, there are concerns about much wetter uh, tail of monsoon, probably if we talk about late August, early September. If that happens, there can be a damage to the crop. I think Anupam will talk more on that. But to my mind, that's a definitely a concern that we have currently. And second concern, as I said earlier, is despite good production, what do we do that with the bean that we are producing if we are not able to handle the meal? Oil, if India is, let's say, next year expected to consume about 5.5 million ton on oil. So whether we produce 1.5 million domestically or produce 2 million domestically, oil market is not a concern. So that's our expectation on the soybean production side. And if you see what has happened on soybean oil demand due to COVID situation, though most of the commodities have shown negative demand growth in these last 3 months, particularly Q2, but the soya oil and sun oil to that, if we add, both have shown a very positive growth in demand, largely due to the fact that we had closure of all the institutional sectors, all the HoReCa segment, and all that demand moved from out of home consumption to home consumption. And home consumption in India is largely soft oil. It can be soya oil, it can be mustard, it can be sunflower, and we have seen definitely demand pickup in all the three oils at the expense of palm oil. Our estimate is India might lose about 6 to 7% of total demand on oil, and most of it would be palm. So India might lose about 2 million metric ton of palm demand, whereas soya and sunflower would at best be same or slightly higher than last year's. What it means, we are dependent more on soybean oil import over palm oil import. And also it meant all the factories or all the refineries which are at the port, they got very good utilization during the COVID, because inland you had a situation where bean could not move to the inland crushing units, and also meal demand was severely impacted because of the downtrend in the livestock sector. So we saw a situation where all the hinterland capacity was not used fully. I think Prashant can throw more light on that. But all the port-based refineries had very good demand during these periods. And among those, all the companies which could manage their supply chain better in terms of import, they had a situation where there was a very good demand in last quarter for the soya oil, and that too in consumer packs and not on the tin side. Now, impact on meal demand is suffered because of the livestock, and we don't expect livestock sector to fully recover in a short time. It might take at least a year before it comes to a same semblance where it was before the COVID situation. So now we have a situation where your meal demand is bad locally, your production is looking higher, and we are hearing about problems with the MEIS benefits for the meal exporters. So sort of a critical situation for the industry, because you have raw material, you don't have sufficient demand for one of the products domestically, and you have a handicap while exporting it because your domestic prices are high, your MEIS incentives are not very certain, and we are anyway outpriced even with those incentives in the world market. And also, we are participating in a broken supply chain. There was a time when India was exporting 5 million metric ton of meal, which has come down to, let's say, less than a million ton. So we have lost our key customers. So even if we want to participate in back in that chain, it will take some work and some sustained effort both from industry and government for us to rejoin the chain that we have lost. So what are the opportunities that it throws? One is revival of meal export, and this is one point which is very, very, very critical for the industry to survive. And to me, both government and industry need to work on a long-term vision. We have been too opportunistic in opening and closing of our meal export sector. So we need a slightly more stable long-term policy, which both government and industry need to follow to gain that market. We all know India has an advantage because it's a non-GMO meal. Not many countries today can offer this, and there are markets which pay you premium. But the fact is, India has been very, very, I would say, unprofessional is probably not the correct word, but I would say we've been very, very opportunistic in terms of servicing those markets. As a result, we have lost some of the key customers. Japan was a very good market for us. Europe is a big market where we are losing. So we need to have a consistent policy. Even my appeal to government here would be to give a consistent outlook to the industry as to what to expect. You cannot have a situation where suddenly one week you say, okay, this MIS benefit of 5% may not be available, and that too retrospectively. So that creates a lot of confusion in the working of the industry, and that strictly needs to be avoided. On the positive side, I'm seeing as a as a refiner and a packer, I'm seeing this market growing up, as I discussed in my previous slide also. So the demand for packed oil of soft oil is definitely growing, and to me this would sustain. We will not see a situation where we go back to loose oil, because consumer has started paying a premium for the quality product, for the assurance that a packed oil provides. And I think government is also stepping up their and lose oil. And I'm saying not only as a refiner or a packer, as an industry participant, I strongly feel loose oil are a threat to the health of consumer. So as an industry, along with the body, along with the government, we all need to ensure that we provide a safe and sound eating product or the cooking medium to our customers. And hence, this is one thing which we are very closely working with the government and with the industry associations to ensure that all the oil that we are reaching to our consumers should be in a hygienically packed form and not the loose form. Uh, when we are talking about meal, one option obviously is for export, which everybody knows. And I think another thing, especially for a country like India, which is very, very relevant, is to promote soya-based protein for human consumption. plus as far as livestock goes from protein angle, but we are largely deficient country when it comes to proteins for human, especially in absence of our non-veg eating habits in form of alternate protein in terms of quality protein, and also the price at which that protein is accessible compared to other sources of protein. So it's a very, very cheap and good quality protein that we can make available to humans. But I think somehow because of the taste factor, because of the cultural as we evolved, like for milk products of proteins, it will need a lot of work. But anybody who's working on it now, or people who have been working in it for some time, they've seen the results. This is one area I think which is a very big I would very, very hard work that's required to cash on this opportunity. But would succeed in long. This is one which is very good for the country, apart from being good for farmer or else. I think all of us it will be a very good service for the whole, providing Indians with a quality protein which comes at a very decent price. So these were the broad S&D that I see based on the USDA numbers and some of the growth opportunities and challenges that I see in India. I think that's what I had to share, and I'll be happy to take any questions. Probably we can take it after all the panelists have presented. Thanks a lot.
Thank you, Vipin. It is quite comprehensive snapshot on the way you look at Indian soybean sector in the context of how the international soya demand and supply has interplayed with each other, and where does India fall into that overall metrics? It's not a very large participant, and as you rightly touched on the issue of the Indian fundamentals. I'll just add a few things for the benefit of the audience, and I'm sure that some of the things will be picked up by Prashant also on that. So, as you rightly said, that so far period average rains till 26th of July has been around 2% higher, which is a positive thing. Obviously, the temporal and spatial distribution would always be distinct year to year, but in general, the gross number itself is a pretty heartening number at 2% more than the long period average. Now, if you look at the Indian seed production, overall seed production this year that is expected is close to around 6 to 7% higher than last year. And then that is again compounded by a large carryover in some of the oil seeds as we have experienced. I mean, 33.5 million ton is what the expectation on the overall seed production as compared to 31.5. And this year we are expecting 2019-20 the soya seed production was expected to be around 75 lakh ton because of bad rains. So if you look at despite a poor crop last year, the corona has impacted us in a very significant way. The destruction of the demand in the animal protein chain, in the feed chain, as well as the meal export. So that has compounded and resulted into a large carryover. And now looking at the timely sowing, I mean, if you look at the year-to-date sowing numbers in soybean has been good. There has been some concerns that we have been hearing, but the acreage is slightly higher as compared to last year. And we will see that if things play out well, and the concern that we are hearing from various regions, that there is some concern on the production side. Approximately, there are 2-3 things that are reported. One is a germination issue that we have been hearing. I don't know whether you guys are hearing the same thing, that there are germination issues in Maharashtra. And there is in MP, we have heard about yellow mosaic virus problem. And what is its impact going to be on yield, that is awaited. But certainly some concerns are there. And if the monsoon, if the rain gods continue to remain abundant in the late portion of the crop as it happened in last year, again we will see some issue. And it is a La Nina year, so the probability is very high for getting rains in the month of September. La Nina years are normally wet for September and October, which is the harvesting time. So essentially, that despite a good beginning, we are still much distant from the goal of realizing a large crop this year, considering a large acreage has played out. The soya meal exports are continuing to be poor. We have not had, I mean, essentially the problems were both internal and external. But the outcome is that we are starting with a large, despite a low crop, decent carryover, and a large acreage, which is right now tentative, but hopefully it should result into a decent crop. So unless and until something happens to our animal protein chain, or something happens to the international demand, which is also unlikely, as you have rightly picked up on the Horeca segment, we don't know how things are going to lift the general sentiment in the soya. So I'm sure that these points will be covered in detail by Prashant, because he traverses across the spectrum of the soya value chain. He's into procurement of soya, he's into crushing, he's into oil refining, and as well as they are into distribution as international text, and is spanning the entire value chain. He will be able to share some good insights which will help us in understanding how things are going to shape up going forward. Over to you, Prashant.
Yeah, thank you. I'm just sharing my presentation for a second. Yeah. Can you see this? Yes.
Yes, we can see this.
Yes, Mr. Reddy.
Yeah. Thank you so much. Good afternoon, everyone. I'll be talking about more about the soybean and the supply chain. How about the each and every stakeholder of this particular entire value chain of the supply chain has been impacted, and what are the emerging trends that we have seen, both from the Indian context and probably a little bit from the international context. How the entire COVID episode has affected the supply chain domestically and internationally, and what are the issues that each of the stakeholders has been facing here, and what are the new emerging trends, which whether are these emerging trends are the short term, or we made minor adjustment to cater to the supply value chain, or we could be able to find about the sustainable solutions over the time to handle this kind of crisis, or are we thinking about the long term solutions for this entire shocks that we have received after this. Though it's not that we have not seen some of the incidents or some of these kind of scenarios in the past. We have seen probably these kind of scenarios in during the financial crisis in 2008, and probably here and there when the global macro trends changed and others. So how our supply chains got adjusted to that and changed that. So are these changes the after COVID? Are these short term, or maybe these providing opportunity to Indian supply chains to readjust themselves, reset themselves for the better trade and development in the entire value chain process? I cannot shift this. Yeah. If we talk about yeah. What does this COVID crisis actually meant to us? If you look up at this graph, this actually clearly indicates we have been seeing, shocking energy prices. We have seen that lower commodity prices, volatile equity indices, industry metals have been fallen. We have seen, adding to that, there have been a lot of geopolitical factors which have been affecting this entire segment in the last, I would say, 7 to 10 months of time period. The implications of this has been huge. The only thing I'd like in this graph is that red line that goes up whenever something bad happens on the economy, or whenever the inflation goes up or anything. That is the gold line that goes up always. The implications of this COVID crisis has been tremendous on for entire all of us. We have seen lockdowns, have been demand and supply issues, lower demand, higher demand, and as well as probably unprecedented demand, volatility, then demand destruction. We have seen empty supermarkets, which means the empty supermarkets definitely is an indication how fragile the world supply chains are. These are definitely an indication whether this gives us a very opportunity whether are these supply chains that have been built over the years need adjustment or remodifications. We not only suffered from this perspective, but the logistics and entire chain has been affected due to this COVID crisis. So what does this affecting in the supply chain meant for us, basically as an industry, as the each and every stakeholder, and what does this actually meant for us, which actually resulted into higher logistic costs, reduced capacities, and many other probably issues when I'll cover probably in the coming slides. So how has been the business response to this? Basically, be it the crush, be it the refining industry, or be it the feed industry, or be it the consumer, or be it the retail industry. The business has to respond to this in the multiple fronts. They have to look both from the operational viability and as well as employee safety, which has been the prime criteria for almost all the companies. So that has been the business has to attack like it's multi-folded war or something like multi-level war or something like that. So whether despite all this, how the stakeholders effectively and efficiently are delivering goods across this value chain, what have they been doing across this value chain for the last 6 months or 7 months, in the 3 or 4 months? So have we already evolved smart supply chains or diversified supply chains? Have we found a solution, or we could just fix up short-term measures that we have already seen in the in the past, like adjusting, or if there is a problem, find out temporary solution to this particular phenomenon. Unable to change the slide, just a second. Yeah. I'll be here talking about more about the stakeholders and the impact in this entire chain. If you look at the entire checkout flow of flow of this value, this commodity of soybean from entire right from the farmer, then to the trade, then to the processing or import of oil. Everyone is affected in terms of somehow, some or the other way. Someone, if you talk about imports, we'll talk about like we have been the importers especially have affected because of the logistical problems. There have been delays in the ports. There have banking been LCs have been delayed. There have been documents which were not couriered. Documents doesn't reach here. The vessel stands here. And lot of other problems. That each of every stakeholders has faced in this industry. Not only the port-based refineries, but the inline refineries has faced as well because of the supply constraints, either supply constraints sometimes and everything. All these constraints have been, they partially have found a solution, though there have been a lot of constraints in the beginning, but over the time, the entire supply chain got filled with the material, though with some problems here and there. Trade, I'm more talking the trade because the trade has affected a lot, considering if the distorted correlations in the international markets or the domestic markets. Initially, everyone used to talk about like international S&D, then domestic S&D demand and supply scenarios. There was a time when people were talking about colony-wise S&Ds or the local S&Ds. That is the level this the trade has been brought down to. Then we could talk about the poultry sector, aqua, and everyone in this district in this sector has affected. Even on the retail part, the consumer were the consumers initially had to fill up his stocks for like 3 months, and later on probably had to wait a little bit on this thing. In short, everyone from farm to fork, almost everyone is affected. Now I'll be talking more on how each stakeholder has affected right from the farmer, and what are the solutions these times have provided us basically in this entire bean value chain that we are talking about. Uh, if we talk about the farmers, basically, let me talk about like a bit with the the very the beginning of the this value chain. There were a lot of disruptions because non-operational mandis across the locations. There has been disruption of the input supplies, agri input supplies, seeds, fertilizers, pesticide, with the Kharif sowing ahead in terms of May and June. There were early rains as well. The southwest monsoon onset has begun early, so we need, with all these problems, and we have been talking about an early monsoon this year, early harvest this year. But all this, if you take a step back, the disruption, all that required for this was, the input supplies, basically seeds, fertilizers, pesticides. And following with this, we have also the problems faced on the farm advisory services and as well as shortage of labor in this industry. Whether all these problems, whether they, this indirectly tells us this: if all these problems have been continued, there would have been a huge loss of income, or maybe resulted into a non-sowing of the bean crop, or probably there have been storage issues from the older crop or anything. But have the supply chains adjusted to themselves? What has been the emerging trends in this? If you talk about input supplies, basically, the agri input companies, they have readjusted their distribution network. We have seen a lot of farmers directly purchasing or anything through e-com. These alternate business models have emerged, though there have been in practice a little bit for the last couple of years, but this is the time probably they took a speeder turn. We have seen a lot of startups developing out, farmers paying to these guys through Google Pay and asking the service at doorstep. So these are the chains that provided farmer a little bit faster and efficient supply of these sources. Another thing is we have seen, like, non-operation mandis, how these mandis have been talking about. There have been like FPOs and other things. The importance of FPOs and other stuff has developed a lot. We have seen direct purchases. We have also the recent reforms by the Indian government of direct farmer can sell anywhere, and there are a lot of other reforms which probably exchange guys can talk about. These reforms have enabled us to sufficiently plays through ourselves in the channels. And the one thing which I would probably talk from the first stakeholder is basically the digital emphasis. We have seen, like, both on the satellite imaging that has taken a very good, very uptrend initially. People were talking about the total availability of rainfall now, instead of talking about, aapke area mein barish kitna hua. People are talking about, we need to talk about probably, how much rainfall has happened in Ujjain in the last 2 days. Is it efficient for the sowing stage? Is it sufficient till the crop harvest stage, or probably sowing and as the crop stages grow? So these are the things that are emerging trends that we have seen, emerging as an alternate business models for the entire supply chain. Now we'll come about, like, I'll just touch upon the processor side. What has been on the processor side? I'm a processor as a company as well. Initially there were a lot of issues. We have seen lower capacity. There were sourcing constraints. There were like basically non-availability of beans, and there was sometimes excess availability of beans as well. So there were whether logistic issues, increased cost, increased the delivery, higher freight cost, traveling, taking a truck from JNPT to probably Maharashtra or anywhere. There were increased logistic costs that we have seen. So, and also from the customer side, how the orders are fulfilled, whether we could be able to fulfill these orders or perform the on delivery basis with the existing supply chain that we have. So all these constraints probably initially have resulted into lower capacity utilizations, increased logistical cost, and probably at a point of time there were inventories lying across the companies. We have seen port-based refineries holding a lot of oil at a point of time, domestic crushers holding a lot of meal, which holding the end product with such a high value is definitely suicidal sometimes. So these are the challenges. But what happens to this? How these things were managed over the time? People now are thinking about diversified supply chains. Basically, I want to diversify my supply chain. I don't want to depend on a single thing. And globally, we have already seen this a lot. I'll tell you. Brazil is one which I track in very detail. I have seen Brazil. The very good thing about the country as a Brazil internationally has, they have these protein processing units and all other slaughterhouses across the country, which enable them, like it's decentralization of the manufacturing capacity, which helped them a lot in terms of as a country. So third thing, like which will helped us in the domestic scenarios, is the direct purchases. For direct purchases from the farmers, it's basically I'm shrinking the supply chain. Farmer trade information agent, or what maybe today I purchase direct. This I would call it as one of the good thing that has happened, not because of the reforms, and plus as well as adding to the COVID constraint. So direct purchases would increase a lot of, I would see a lot of FPOs coming in. There are a lot of supply chains needs to be gets shorter. People are thinking about that. I'm developing. We are probably everyone would think of developing diversified supply chains. Whether I need to buy from exchange, I mean take deliveries from the exchange, take it from the farmer, take it from directly from the farmer, or any other different FPO models at that which is coming up. So third thing which probably talk about traceability and blockchain in the international scenario. The constraints that we have seen, probably this will speed up now. I don't have my documents are discharged from internationally, probably from Argentina, Geneva, and then they don't reach here. What do I do now? So my vessel, my banks are behind me, and a lot of constraints entire this chain in the import and as well as this thing. So blockchain and traceability of the supply chain would probably gain very much importance in this entire trade of international part of the trade. So that is what I would see as one of the prominent thing that is happening in the coming days. Now I would talk a little bit on the customer side, which means I classify basically as the feed industry or the refiners, and what they have seen. I would say this is industry which probably has seen the worst. I would say probably across all this value chain. They were at a point of time because of the Horeca hotel, restaurant, and canteen demand. That has been absolutely gone. Like Mr. Vipin has already said that a lot of Horeca demand that has been affected. Like a couple of, I mean, I think he has already like 1.5 to 2 million of palm oil is demand destruction. Not only the demand shocks, you need to alter the supply shocks as well. There have been no supplies. Sometimes there have been like so first initially there were no supplies, and later on you don't have a demand. In addition to that, the third point which I talk is aftershocks, which I would say basically like now you have a demand, and you don't know whether is it a real demand or not, because all of a sudden you build upon the inventories, and then all of a sudden in building up of an inventories is not an demand. We all of a sudden we estimate with all this unpredictable demand behavior has been seen in the past 3 4. I remember 2008 once again, just to quote, piling in the upstream supply chains, the inventory that has been built has been considered like these were considered like a growth of the demand, but which wasn't in those times. Then the things continue to be negative or not that good even after that years. So what these guys, what the crushing industry or the feed manufacturers or the refiners, what they have done basically, they have been evaluating this thing. So they would be looking probably at a point like product substitute, and probably product substitute if they can find anything, they'll be evaluating on this. And then an infrastructure like Aqua is a good example where we India export a lot of prawns, tiger prawns, what we call as to especially to US and other countries. So but the US at a point of time had 3 months of aqua inventory, I mean inventory and other stuff, but India doesn't have. Probably is that a scope for Indian? Are we capable? Are we? Do we get some value for money by infrastructure for developing that cold storage infrastructure in aqua? So these are some of the things what people would probably thinking of in the coming as one of the emerging trend. And the one I would talk about is the localized demand estimation, which is this is going to be very crucial for the entire feed manufacturers, and whether they need to go to the how the demand is going to come, whether database decisions, I would call it as, rather than localized demand estimation. It's not like the festival demand, I increase something. It's today they'll be talking about festival demand, so many consumers consuming so much of chicken, or probably anything not consuming or not consuming, and this is the demand growth, or this is the demand fall in this time period, in X amount of time period. So this is what the industry would be talking about in the coming days. On the supply side, what the changes that I'd see is, these guys would be probably, buying ahead, or probably using, they will have to use exchanges here. Probably, I would say they'll have to create a forward book, which needs to help themselves, not only themselves, but also to the crushers, and right from the entire value chain. So, the exchanges needs to play a very critical role here to set up this forward book, not only in terms of meal, but also in terms of oil. Like a mayonnaise buyer, he would be happy to have a forward book of 4 months or 6 months, or probably similarly on the feed manufacturer will have a forward book of like 3 months, 4 months, or whatever. So entire these are the efficient risk management practices. Would this guy all the this trend of supply chain actors needs to develop or probably will come up in the coming days. The last I'm talking about, which has already been spoken as well, is about the consumers. I call it because the retail consumers, or the preferences has changed. Like much have been explained in the previous presentation. I'll just take a little question. I'll just pause it here for a moment. Definitely, there has been a shift from loose to pack oils. A brand preference has grown drastically and expected to continue as well. This we have seen in the brand sale growth of all the companies. If you go back and take the numbers from the web. So that clearly indicates the brand growth and consumer preferences in the coming days. And I expect this to be continued in the coming days as well. Frozen meat, frozen or processed industry, or the plant-based protein, or the vegetable meat. These are all the upcoming terms which you're talking about, but I'm not very confident about is India taste-driven or nutrition-driven. Today, I don't know if I talk a bit more about the taste or to talk about more about protein, fiber, and carbs. So this palatability of Indian consumer would probably I'm not very sure if this is going to be the short term measure, but yes, someday everyone is realizing that these are the coming opportunities of for emerging trends in India that is going to come up. So in short, I'll talk about like new things that we are going to see after this is going to be definitely different. Definitely different from what we have seen in the last few years. Uh, to just summarize this, I just put it as like new technologies probably will emerge. A lot of startups come up. The manufacturers would prefer about low capex things, and the consumer shift is going to be taken in a very this thing probably retail to the direct shipping, like the be it farmers or be it the consumers, home to door to door deliveries in terms of the entire value chain. And last but not the least, but big data and supply chain. Over the time, the database management, database decisions is going to take a very prominent to fill this gap in the chain. So indirectly, it's these changes or configurations that I call as will result in long-lasting changes, of the supply chains to in overall to build the resilience. Yeah, thank you so much. I end it there. Over to you, Anupam.
Prashant, it was a very compact assessment of how the domestic situation is going to your view on how the responses are going to come from various components as the exporters.
Mr. Kaushik, we are not able to hear you again.
Audible now? Hello? Am I audible? Am I audible?
Again, it's very low, sir.
Because I can hear it very well and it is of a single instrument. Hello? Audible?
Hello?
Audible now?
Yes, sir. A little better. Not very clear.
I don't know what to do for this. Is it better now?
It's better, I think, Anupam. You can
Yeah.
continue.
It's better. It's better. Yeah. Just for the
So
continue.
I just wanted to share one thing that what this supply shock or what this demand shock has done. I think on the recent history, India has had the lowest crop possibly in 1920 to around 7.5 ton. Do you agree on that number, Vipin and Prashant?
So I could not hear. I could hear only
Could you
half
hear?
of it, but I could hear only half of it. But what I understand is like unfortunately we won't be able to talk about the crop number. But yes, the crop has been comparatively lower in terms of the previous year, and we might see a better as per the current weather conditions or the monsoon conditions. The crop appears to be faring much better in the current market condition, current weather conditions.
But I think I would, if that was the question, I think I will agree with Prashant. This year crop definitely looks better. And in absence of data, I think in Indian context, it's easier to say what swing factor you're looking from this year compared to previous year. In our estimate, we should at least be looking at 1.5 million ton higher crop compared to last year. All going well from here on.
Unable to hear you. Unable. I think we can't hear you again.
Let's. I'll come back later. Kapil, if
No,
you
it's
can
clear.
share.
Yeah, maybe Kapil, you can start.
Yeah. Can you see Rolly?
Yeah, we can see it, Kapil.
Yeah, sir,
Yeah.
we can see your slides.
Okay.
Yeah.
Thank you. Thanks, everyone. Thank you, Anupam, sir, and Prashant and Vipin for your words and discussion and a brief about demand supply fundamental changing dynamics and how we can move back to resilient supply chain of soybean. Uh, I would start that the resilient supply chain means when we know what the disruptions are and how they are going to impact the ecosystem and what's going to be the new normal, especially when we are dealing with a situation kind of COVID, which is unprecedented and we haven't seen any kind of scenario. And whenever this happens, uh, demand supply changes, curve shifts, we see unpredictability in terms of how the demand is going to be, what supply is going to be, what the scenarios going forward. That creates a risk to all the value chain in the supply chain, and then I think that's is what which creates volatility and role of exchange and risk management comes into picture. So I have meanwhile removed all the slides on the fundamentals, which already has been discussed in detail. I will just quickly cover on the risk management side, what exchanges are doing, a bit of what changes we do see in pre and post COVID situations, how Indian exchanges are doing, what global market, oilseed market is trading and how they are trading, and at what capacity their futures are performing and where we are placed as of now, just to understand that the risk management and how important that is and where we are lagging, and maybe a bit of going forward in the recent development which has been taken, initiative has been taken by regulator and exchanges. So I think to start with, except COVID, there are a lot of things which has been going into Indian agriculture market, especially on the trading side, and which have been impacting the way Indian market is being traded. And first of all, and the foremost, which we have seen, I think oil seeds we have to exclude from the first sentence, which is the increasing production and maybe self-sufficiency. And from a short supply country to now we are surplus. In all the commodities, all the grains in pulses, and except a bean. And when we say from the short supply to surplus, we are sitting, I think, on the pile of stock, all-time high stock with the government, with the traders, and but still, Indian prices for most of the commodities are higher by 30 to 40% if you compare in case of wheat, in case of paddy, and maybe in case of pulses as well. And same with oil seeds. So that's the dynamics which we have been seeing continuously changing despite higher production and maybe the record production. We are not managed to have that kind of stock and inventory. Still, the prices, Indian prices remains, and the spread in between international market and domestic market is increasing, and continuously India is struggling to be into the international market. Doubling farmer income is a noble intent by the government, which they have been pushing since last 5-6 years. A lot has been done over that, and I think MSP is something which is now controlling all the market. MSP of all the commodities, including soybean, have been increased exponentially. We are now maybe 5 years back we were around 2,500. Now we are 3,880. and that kind of increase we haven't seen in last 10 years. I mean, in the last 1 decade. And because of that widening MSP regime and widening prices, we are seeing government coming to support farmers so they can ensure that farmers' realization are close to MSP. Most of the commodities are being covered under MSP regime. Government is buying the non-traditional commodities like a bean, all the pulses, bajra, groundnut, and all many on the small scale. Even the corn is being bought in some states. So that is something which has changed how the market is being traded. And now next is soybean is going to be part of MSP regime. Yes, it was not by the direct procurement, but yes, through the price difference scheme. Soybean was the first commodity which was covered. And yes, we impacted the trade dynamics in the physical market and how it has impacted price and created a lot of volatility in a short span of 3-4 months. Government policies, again, connecting two points which have been discussed. There are uncertainty or stability we need to see. Government, there is a thin line which I think government is trying to balance out being consumer friendly or producer friendly while they are trying to ensure that farmers are getting right price, which is MSP. On the same time, government is also trying to have a strong control on the prices which consumers are supposed to pay for the same commodity. And I think that's a thin line where the government or maybe the trade has to be very careful that how these balancing approach going to impact the prices. We have seen in most of the commodities where government has bought at the higher prices while supporting the farmers, and then this supply the same material at a much more discounted prices, and that has a huge impact in inventory management and supply chain management. And fortunately, soybean has not been part of that, but we have seen mustard, which is still going on. Pulses we have seen. The dynamics of soybean will not be what we are discussing today. Government agencies, now they have become an important stakeholder in the physical market. I think they're the largest supplier for most of the commodities, and with a altogether different purpose, not trading, to support consumer and producers. And that has changed dynamics in a way and created a lot of changing geopolitical scenario. US and China, we have been discussing last 1.5 years. Still it's going on, and that has a direct impact on bean supply chain and prices. COVID impact, this is of course 6 months old, we have been seeing, but that has really changes the demand supply curve, and I think it's going to take time to settle this curve. Though when we know the supply is, but demand, like Horeca demand, which have been discussed, and rest of the demand is quite unsure, and the trade has to be very careful that how the demands finally will be once we move out from the COVID, or and most importantly, how much time it will take to stabilize this demand and reaching to the new normal. Agri reforms, government, of course, the silver lining, this entire COVID have remain agri, and the reforms which government has initiated. And I think these reforms, we should not really look these reforms with a view that because of COVID government has done, while rest of the industries and the sectors have seen reforms which are short-term in nature, considering COVID. These are the reforms which were in demand. I think since last 20 days, market have been discussing making market free, creating ease of doing business in various states, and moving key commodities out of Essential Commodity Act, and building more confidence among the market participants. So I think that's something new. MP has moved away with a Anugya Patra. I think which was a the most typical instrument or policy by any of the state market participants a lot. And of course, the last one is changing info dynamics, the knowledge gap, which is there in the more seasoned player MNCs, the people who have access to the new level set of technology, either it's blockchain, either it's any other weather-related informations, ground truthing in terms of sowing, in terms of productivity, vis-a-vis the traditional set of participants who still drive Indian trading, is the people who still believes the old way of getting info and converting that into the numbers. So I think that dynamics is changing very swiftly. This gap need to be bridged so the trading happens seamlessly without much of noise, and prices are accepted to larger set of the participants. This is just how soybean prices and MSPs, production MSPs, of course, it has been discussed, so I'll skip it quickly. The important slide, which definitely move and lead us to the risk management and importance of risk management in supply chain. The soybean has been remain a very volatile commodity. If we see last 5 years, if you see the monthly volatility year on year remain in range of 5 to 6%, while annualized volatility remains 26%, which was the highest in 2015-16, in range of 20%, which is to be considered high in comparison to other traditional big size commodities like corn and wheat, where volatility remains 16 to 17% average. Soybean is a bit high, and maybe because of different fundamentals and and derivatives, it follows meal and oil and palm. Coming to this volatility, after this volatility, the important part to understand is that how different market globally and in Indian market handling this volatility and what role exchanges are playing and where they are placed at this point of time. I will start. I have taken only 3-4 exchanges, put a comparison that where we are in compared to global market and how the risk management is being adopted by the Indian market and how much is the scope and way forward what we do. Soybean, if you look at the Board of Trade, the OI in 2019, and this open interest is the closing December open interest, is 96 million ton. And if we do compare it with the production of that country is somewhere around 300. It's a production of nearby country, the US and this, and the ratio comes to 32%. The same soybean at Dalian, which is the new emerging exchange, is 1.4 against the production of 16 is close to 9%. Soybean at NCDX, the average open interest remains around 300 to 400,000 metric MT against the production of 9 million ton, which is only 4%. Meal, we do not have any meal futures, but if you look at the Board of Trade, 35% of production comes as an open interest to the futures market. And the Dalian, which is growing super quickly, is having open interest of 42% of their local production. Coming to the oil, which is another important derivative, is open interest of 50% of their production and supply, which is 13 million ton. Dalian again, moving fast, is 48% of their local production is they are always as an open interest on the futures market. But in NCDX, if you see, it's only 0.12 million ton, which is only 7% of our production and supply. So the gap is clearly visible, means while international market have very quickly to the futures market, the entire trade happens basis trade, and I think the flat price trade has become a history in most of the trade. Everything moves around what board is trading, what DC is trading. Indian trade, because of its complex nature, maybe the way we trade, the way we consume, and the fragmentation we have on the ground, has not yet explored futures market, and we are still away from the global benchmark, despite the oil remains oil. This oil complex remain a most active and tradable product on exchange system. Traditionally, we have been remain a short hedging a country where hedging is to be considered that you have position in futures and you have a position in the physical market and you have a position in the futures market. I think the long hedge basis, and that too on the basis of basis, is something which is a miss in Indian market, and that need to be, I think, quickly taken up by the value chain participants to be into the strong supply chain. This is a quick just review that how exchange soybean futures have worked year on year. 2011-12 has remained quite a good, where we have open interest of 4 lakh MT. Still in 18-19-20 we have seen open interest of close to 200,000 MT. This is the average for the year. On the max side we reached to somewhere around 400,000 MT. While ADTQ and ADTV remains close to 0.3% or 0.4, 30 to 40% of open interest converts into daily volume, which is interestingly is in at par to global benchmark. If you compare ADTV, open interest to volume ratio, daily open interest to volume ratio, even the international markets follow the ratio of 0.3, 0.4, which we also follow. But in terms of open interest, we are far less. I mean, people coming for hedging are less as compared to international market. How traditionally soybean futures are traded, of course, from the beginning of season, which is somewhere end of September. We see the open interest started building up, which reached to the peak in the month of somewhere around January, and slowly and gradually it started depleting. And by the end of again August, we are at the lowest level of open interest. But the interesting part is that unlike any other commodity, soybean is the first one where we see maximum open interest building up in the farther month contract, and sometimes we have seen open interest building up 3 months, 4 months in advance for the new season, which is October and November, while in rest of the commodities which are being traded on exchange, it 1 to 2 months. So I think soybean value chains are better than what other commodities value chains are in terms of forward and futures price discovery. But yet, if we compare to the international market, we have a long way to go. This is some deliveries which is happening. So it remains for the price risk management, but soybean is always very heavily backed by the physical deliveries on exchange system. We have seen deliveries happening close to 450,000 MT annually deposit, total deposit. We have seen max on this side. Normally we see a total deposit on exchange in exchange ecosystem close to 2.5 to 3 lakh MT, while average monthly delivery of 20 to 25,000 MT in one financial year. So it's very much backed, and I think that is something which makes this contract much more suitable, because these kind of deliveries keep this futures market in line to what's happening in the physical market. Coming to the new changes, what we are seeing, of course, FPOs are something which exchange have been pushing to get them into the active futures market, so they can be part of supply chain and contribute as efficient as the rest of the countries do see farmers participating. Either it's US wheat farmers are participating or soybean farmers are having large amount of open interest in the futures market. We have different kind of challenges. Farmers are small, they are fragmented, they don't have that kind of technical know-how. But yes, with the help of regulator, a lot of efforts have been put by exchange and exchange team, and a lot of, I think, benefits also have been extended to the farmer. So we have close to now 300 farm FPOs registered with us, which represent close to 500,000 of farmers. And futures market, not only delivery, they are, I think, getting delivery from exchange system in certain commodities where they actually use them, like cottonseed oil cake, and that is quite an encouraging thing. It's small, but the way government is pushing a lot of efforts on FPOs, and new schemes are coming up, that's going to play a huge role, and FPO going to maybe work as an aggregator or the new stakeholder in any of the commodity supply chain. So these are some, I think, changing dynamics which everyone has to take care of. Of course, there are few who are following these all very closely, not now, since they are active in this trade, but rest of the market is still have to move. So shift to the private market. I think the direct procurement after this government reforms is going to be the new dynamics, where you can just go and buy without moving into the complexities of different states. Online marketplace for larger scale procurement and disposal, that has always remained a challenge for most of the plants and big ticket buyers, that to buy quantity we need to move to a lot of people, and even the new reforms doesn't find a good way as a solution for that how can we reach to thousands of farmers and buying big quantity. I think the online platform are going to and this online marketplace is spot market I'm talking about, not futures market. They are going to play a huge role in a strong supply chain. Hedging and risk management, futures already are there. Options are also available in soybean. A lot is happening a lot of activities are happening in various government agencies and department, hopefully using futures and options as a tool to ensure that farmers are getting a better prices. A lot of discussion is going on. Hopefully, something should come up in this direction, not only in soybean, rest of the commodities as well. The basis trading is something I think quickly the entire trade has to move on. It's happening on and off, but still, if we see the traditional Indian futures market is traded on the basis, the location it has directly presence, a basis center and additional delivery centers. Mostly, it is traded by people who are in close vicinity to these delivery center, but it is not the case if you look anywhere in many of the commodities in international market where actually there is a national level contract and it's being traded on the concept of cheapest to be delivered. We haven't seen that, but yes, I think that's a gap. The basis trading, every center has its own demand supply dynamics. We need to correlate it and establish its relation with national benchmark futures prices and have to develop my own strategies to trade futures. So that is something which need to be adopted very quickly, and futures has to be put as a reference price whenever big trades or any kind of trades for the forwards is happening. Improved infrastructure and logistics. We have Anupam to speak on that, but exchange is continuously pushing to have improved infrastructures, so the cost which is there post harvest can be reduced, and maybe moving to the bulk and silo is something which we are seriously discussing with all our service partners. We have recently seen that silos are coming up into exchange system. We have one silo for wheat in Kota and another we have seen in Bihar, in Purnia for maize. And I think soybean has no reason to be part of silo. We are trying to understand that, but moving to the next level of infrastructure and logistics will help the entire ecosystem to trade smoothly. ENWR trading is something I think demat trading we have initiated, that all the commodities can be traded electronically with a click. And even the COVID time, we have seen that deliveries of electronic goods are happening and even being lifted by many of the value chain and the plants, and which was not possible. I think the first phase of lockdown, which we have seen where having 20,000 empty, 50,000 empty was not possible. Government is pushing a lot. New regulators is now taking care of this ENWR piece. They have integrated ENWR with eNAME. The efforts are going on. We are also trying to integrate this into our ecosystem. Features are all ENWR, but all the FPOs and farmers, we are trying to get ENWR into piece. So I think that is going to create a lot of seamless trading in the physical market, where on just a click of button you can trade ENWR and simultaneously hedge as well. So that is something which we have been working on, but yes, that is going to be big for a smooth transaction in physical market, with not much worry of moving to various physical locations and having number of complexities and issues on the ground. And FP, of course, we have discussed, are going to be huge, and maybe they are going to be the primary level of aggregator of goods. A lot of schemes are coming up with the government. Already we have seen all the plants, all the MNCs, all the big traders have started integrating FPO for their supply chain, but still the number is quite less. We see all out of 10,000 MT, which government claims to have, somewhere around out of 5-6,000, only 500-600 FPOs are which are very actively participating in these kind of operations. But the kind of push is being given by either with government agency, the exchange, other RIs, and other agencies who are involved with FPOs. They are going to be an important part of supply chain of any of the commodity, not only soybean. This regulatory initiative which RBI and SAB both are pushing, and I would like to close with this, that a lot of risk we have seen two largest oilseed industry is struggling because of volatility, price risk, and creating a lot of dent in the bank's book, and a lot of time to recover back, and still a lot needs on that. And they are saying to the bank that please encourage hedging and risk management. That has to be tool, especially when you're having large ticket exposure. And SEBI, with the same intent, SEBI has also come up with a circular that all the listed company has to disclose their exposure into the commodities market and hedging in their annual balance sheet. So with this, I would like to again say that risk management is a key part. Globally, it has been accepted since 1875, which starts with grain itself. Bean and oil seeds has remained on top. If we look at the global prices and futures market, we follow CME, we follow Bursa. In India also, a large amount of trade follows futures market, but still participation remains less because of various reasons. So that has to be integrated with any of the physical operations. Risk management has to be a key part to build, a resilient supply chain. With this, I end my presentation. Thanks a lot.
Thank you, Kapil. It was quite comprehensive and insightful presentation. Am I audible well to everybody now?
Yes, sir.
Okay, great. So it was a pretty comprehensive one, and I'm sure that most of the participants in the edible oil value chain are already participating in your futures platform, which requires reasonable deepening. Uh, Mitu, can I request you to put others on mute because there's background noise coming from somewhere? I don't know. Yeah, thank you. So it is. I'm sure that most of the value chain participants are participating, but there is a need for deepening these markets, and there is a need for bringing the institutional participants, without which the counterparty of risk management, which is a professional speculator or an institutional speculator, is still the missing link. And I don't know how the regulator will wake up to the reality that an institutional speculator is a must for providing a solid forward and onward progressive platform for the people who want to place this risk on the platform, which somebody has to come and pick it up. So I think that is one piece that is required to be picked up. What I was saying, and I was not able to convey my comment because of the audio issue, is that the Indian entire soybean ecosystem is struggling with the two key problems, and I don't know whether we have any ready solution for that, or whether the industry has started rising to the occasion to meet that challenge. One is the productivity. I mean, India is still at a 1 ton per hectare kind of productivity as against the global averages of 2.5 ton per acre per hectare. So whatever we do on the supply chain side, whatever we do on the risk hedging side, the biggest risk is the being poor on the productivity scale. So that is the biggest risk, and I think that requires an institutional addressing, that how do we bring the gap between the world averages and Indian productivity to a level that where the production risk stops mattering. I mean, when you have only 7.5 million ton production last year, and you still do a carry out of 2.2 million ton, because you have got lowest on record crush ever. I mean, I would, I'm sure that Prashant and Vipin would agree that we had carried forward for whatever reasons. So the entire value chain got disrupted in such a fashion that the crush collapsed, and it resulted into a serious carry out. And because there was no institutional risk taker or risk aggregator, certainly the entire risk got passed on eventually to the farmers, if not to the value chain, because the value chain is fragmented and they have some methods to mitigate themselves. And then there is another issue of the volatility in our duty policy, and I just would like to share one slide which will give a sense. I just have to share this. Just a minute. Yeah, this is one. It looks like again the technology is playing truant here. So what I'm saying is that
I've given you the presenters right now. You can try and share it now.
Okay, sure. Yeah.
Yeah.
So this is the biggest culprit if we see that because there are a lot of risk. I mean, the issue of missing speculative risk. This is how the net crush margins have what you call behaved in last 5 years in India. And unless something happens to this kind of volatility in the crush margin, and there is another issue about apart from this crush margin volatility, which makes the entire the soybean value chain participants always grasping for some sort of risk mitigation, which is not sufficient in the exchanges, because you can do it mostly on soybean and oil, but there is a meal hedging is also required, which is going to be required for crush margin. And this is the second problem, which we all know, that the oil meal ratio keeps which remains very volatile for various reasons. It could be the meal demand collapsing for some reason, or the edible oil duties changing, or something happening in Malaysia. So unless and until we provide these solution to these two what you call situations, it will be difficult for creating any institutional mechanism. The That leaves us that how do we? I mean, I would request Vipin to share some of his perspective on these two aspects. One is the crush ratio, and the second is the oil meal ratio, which is due to the price. So what is his take on that?
Anupam, crush ratio, it will keep on varying till the time we have differentials on duty which are so big. If you are raising duty from 5% to 35%, obviously this ratio will go haywire. Uh, as a crusher, I would love to see a forward meal market, which unfortunately, we never have in India. But that's the only way you can hedge yourself. Otherwise, you have no choice but to live with this issue around very very volatile meal ratio. But I think it's made more volatile because of the duty changes that we have, and duty changes have been abrupt. Now, specifically in current situation, if we look at TRV changes every 15 days, when your duty was 5%, your TRV changes are not impacting you as much. But when your duty is 35%, these TRV changes are huge. And if you look at duty, it's not only the duty which is impacting, it's also the rumor about the duty which is impacting which is imparting big swings on oil, and hence skewing the ratio. But we don't have a. I wish we had a solution, but and I think it's for the good of industry that as a country, we move to a much more stable policy regime on edible oil. I think something on the lines of the export tax that we have in Indonesia, Malaysia, where you have a fixed grade which is related to a price, so that takes away the element of speculation around that. That would lead to a much more predictable ratios. I would say it will not make them very stable, but far more predictable than where they are. Beyond this, I don't see anything on this. Prashant, you have anything to add?
Yeah, I put a couple of points here, basically. One is on the crush margins, and second thing on the oil meal share, basically. The impact that we have seen in your graph is basically because if you have seen in the last 4 5 years, the global productions have been going into surpluses, and we have seen in a continuous 2 or 3 bad years, which led to shorter crops, higher domestic meal prices. We are into disparity. If you took up at the proper good exports in the last 2 to 3 years, the export disparity has been very high. Even today, the export disparity, we are like $40 $45 away from any meal export, which is a major contributor for this crush margins. So that is where. So until is over, like I always said, the productivity is increased. We have a good crop. Once this chain of meal exports come into a picture, consistent meal exports come into picture in the coming days, then that will be a good this thing. The second part, which I recognize, is the overcapacity of the crush industry. That is on with the lesser crops, as there always been a fight for the bean crop always in the initial days or intermittent thing. Third thing is the farmer selling. Where farmer selling has been unpredictable in the last couple of 2 to 3 years, which is, you never know. It has sometimes the farmer holding capacity has drastically increased against assuming this thing. So that is the reason we find various distorted crush margins across the industry. But the only solution, temporary, I would say, until unless we have this trade flow, is the proper efficient management, of these positions, including the, the cash book and the futures book, will probably, help the crush industry a lot. Second thing is on the oil meal share. Domestically, globally, oil has been, this is, I would say, the graph that you shown, I would say that is an opportunity for trade. So because the oil meal share has always been, opportunities trade. When the oil share goes up, or the contribution from the oil that is coming to the crush, rarely, very rarely oil pulls up the meal prices. Once in, probably I've seen like twice in last 10 to 12 years, probably in the historical data. So that itself is an, I'd not say that sometimes is a bad or anything. That needs to happen. That provides an intermittent arbitrage to trade in the oil share and as well as the meal share for the domestic trade. Yeah, thanks.
Thanks, Prashant. There is one more question related to this. Though we have been blaming COVID disruption to a lot of our problems in the soybean ecosystem, there is one more chart I would like to share with you, and I would seek your response on that. That how much of it you ascribe it to COVID, and how much of it you think that is intrinsic to us. And this is the number I would like to share with you. Is this? So, first, Vipin, I would like to ask you that because you see that the disruption during the COVID impact has not been, it has been significant, but I mean, we have been losing the number on soy meal exports consistently. So, what is the remedy for this kind of volatility in our meal export numbers? And what do you think?
Yeah,
I mean, you and Prashant as well, because Prashant, you are a meal producer as well, you are a crusher. So, you would
yeah.
have some better insights on how to address this issue, which is an integral. So if oil meal ratio or the crush efficiency is a function of this number, so how to resolve the problem for this?
I
Yeah,
think Anupam,
the one thing that I see in this,
okay.
Yeah, please.
yeah, you can take it. That's fine.
You go first a bit.
No, Prashant, you go ahead.
Okay. Meal exports has this meal export and as well as the domestic, if you see the numbers in the last column, that has been both due to COVID and a disparity in the meal exports. So if you see about like, initially if you see like 2018-19, the domestic demand, if you talk about year-on-year growth, there has been a, reasonable, not a very, very good growth, but a reasonable growth year-on-year on the meal side, on the feed industry and over this thing. So here we see a degrowth all of a sudden, and that is what suffers, makes these numbers more into the negative number, disparity numbers. The only thing that I would see is a good crop and probably some export incentives would probably create a book. And another thing, because non-GM meal can find significant demand if there has been a parity and we get a little bit premium over compared to other origins as well. So that is one. But over the time, what is happening is, our traditional destination markets, which have been like Southeast Asia, Vietnam, Malaysia, Indonesia, some other countries, we have been losing share to the, GM markets or some other markets over this thing. So this in the long term is definitely hurting for entire crush industry. The short term solution, the medium term solutions, I would call it as a good crop and probably a good export incentives in form of MI, in any forms would probably put this into a little bit back on the track.
So if I hear you rightly, Prashant, you are saying that the government of India should keep on compensating for poor productivity by incentives.
That's the reason I use the temporary solutions.
So
The long-term solution is definitely higher productivity, good export number.
Yeah, Vipin, you're saying something.
Yeah.
Vipin, we are waiting to hear from you.
you are projecting it from 2016-17. I would probably extend it a decade back. There was a time, when I joined this industry more as a meal trader, and that was the time when India was exporting about 5 million tons of meal. So from 5 million ton, you have come down to under a million ton. So I would not say it's a only COVID-led situation. Obviously, it looks bad in 1920 because of COVID, but it's a trend which we have to acknowledge that as a country, we have lost our competitiveness on meal export. Poor productivity is definitely the reason because world has gained on productivities where we have been stagnant at 1 metric ton per hectare kind of a number. And at the same time, our prices are going up because of MSP support. And in general, India has become a market in agri-commodity where it's distancing itself from the world. So, uh, we cannot pay less to the farmer. So we have to increase the productivity, or we have to incentivize meal by more subsidy. And I think that's the trend we are seeing in all commodities. Even sugar, if we are exporting, it's largely on back of subsidy. So I think it's a time we decide which are the crops as a country that we are competitive and spend our energy over there. So there are no shortcut solutions to it. Unfortunately, your prices would keep on rising, and India essentially remains a flat price market. So on the years when we see a drought-like situation in either of the American continent, that's the year probably we'll see a larger market share. But on a long-term trend basis, I think it's a continuous decline, and you can't do much to arrest it unless you increase subsidies, which to me is a you don't know when to stop and till what time you continue giving subsidies. You're already giving 5% MEIS, and there's no end to it. Till as your MSP or the bean prices keep on going up, you would have situation where you're carrying bean not pricing it correctly in line with international standards. And other side also is to see why our livestock industry is not competitive, because we are keeping ingredient prices at a level which are disconnected from global, whether it's corn, whether it's soybean meal.
So I hear you, Vipin, and I think what the message that both of you guys are giving is that it is not actually an incentive by government to exporters. Actually, the exporters issuing a penalty note to government for not increasing productivity, and the government is saying sorry by giving that incentive. That okay, we couldn't produce the increase in productivity, so please take this incentive here to support the loss of productivity. Is that so?
See, you are indirectly supporting the MSP of soybean, I would say, because soybean is not getting sold at the world market price. So your raw material is at a price which is disconnected from the global level. So hence your finished product cannot compete in the world. So I would say it's an indirect subsidy that you are giving to agriculture.
Okay, great, Govind. Now I think we are coming to close to a session. We are in our last 15 to 25 minutes. I think we can extend by 10 15 minutes to make up for the loss of initial time. And there are four questions that I have received on the chat box, which Neetu has compiled for us to answer. So the first question is, I think, can be taken by any one of you. The first question says, would like to understand more on impact of supply issues in palm oil production in Malaysia and Indonesia due to ongoing floods on soy prices in India and outside. That's the first question. So who would like to take? You would like to take a stab at it, Vipin?
Okay. See, how much of effect rain would have in long term is still people are debating around. But for short term, if we specifically talk of July month, we have seen about 11% decline in Espoma production figures from 1st to 25th of July over June, and that's more about your logistics getting disturbed, your collection process getting disturbed. Uh, uh, Rain would also affect pollination, so you will probably see that effect 2-3 months down the line. Overall, everyone is looking at a slightly lower palm production estimates than we were looking at probably 3 months, 4 months back. So I would say world has probably come to the conclusion that we are certainly 1.5 million tons lower than where everybody was putting their number. So each trade house would have a different number, but I would assume most of them have reduced their production forecast from the beginning of the year till now by about 1.5 to 2 million metric tons. And we are seeing that in POBO spreads for Q4 they were about -50, -60, and for Q2 next year they are about -25. So that means palm we don't look it we don't think it would go back to 2000 kind of a more reasonable level would be 2600, 2700 ringgits, and that also gives support to soy oil prices globally. And when it gives support, that's what India has to pay in terms of global prices, and that I covered in my presentation also when I talk about USDA projection on soybean oil consumption, I felt there is an upside because of palm looking bullish and the spread between palm and soybean oil becoming so narrow. It would place a lot of demand on soybean oil and prices would definitely stay firm.
Thanks, Vipin. The second question is again I think it has come from Aditya, if I'm not wrong. Yeah. So this question, I think Prashant can take a stab at because you have seen some of the international application technology. The question is, what do you foresee as future enablers or constraints for technology adoption by the industry stakeholders?
Okay, I think this is the necessity of the current times. Technology would play a very good role if you talk from the farmer level till the end consumer level. This has been with the recent things like Internet of Things and artificial intelligence or everything. All the entire supply chain is webbed with the devices basically. So this is what I would see at the right at the farmer level. Then blockchain level in terms of bigger corporates, we have been, technology is definitely an essential tool which is coming up. And I'd more focus on the artificial intelligence that are used in Indian conditions like that. So that is where we might be coming up, talking about using technology to determine yields or determine, rainfall impact on the crops, rain yield on the crops, and that is what is the coming time. So all the people are adapted. And if you look up at I'd say my own experience of like 7 years back, 7 to 8 years back, I used to call up mandis and say कि आज बारिश कितना हो रहा है आपके एरिया में बारिश कितना हुआ है उज्जैन में बारिश कितना हुआ है इंदौर में बारिश कितना हुआ this was my way of questioning things and today I just log in IMD website and see amount of rainfall that is added to the soybean crop and whether is that rainfall sufficient to grow that crop till the sowing stage or the bifoliate or trifoliate conditions or the flowering stage till the harvest. So that is the change in the approach that this technology would definitely bring in the coming days.
Uh, thanks, Prashant. The another set of questions are coming on the exchange functioning and exchange ecosystem. So there are two questions asked. I think there's one question by Rajit Saha. I think Kapil can take this up. Is that why the participation, that is the volume and open interest, is going down in derivatives market despite increase in supply, increase in volatility?
Yeah, I think it's a quite a valid question. So if we talk about futures, we talk about two things: uncertainty of price and uncertainty of supply. And because of changing demand supply dynamics, and most importantly, the government being part of most of the commodities have ensured a lot of processors that don't worry, we are there to ensure there is a supply and at a desirable price. So we don't see the largest consumer of wheat doing hedging. Just there is something they know that this is going to happen, and we are much sure about that. So that is one. I think most of the commodities which has now come into the government procurement model have seen a kind of reduced participation. Maybe because of these two reasons, because supply is sure and we know the prices are going to be range bound, unlike in the open market scenario. That is first. Second, maybe because of the surplus scenario, most of the commodities are trading in a bearish zone, and India traditionally has remained a bullish market where the maximum participation comes as market moves on the bullish side. So I think these are two, three reasons where because of that we have seen this is thing happening. But open interest, if you see, even the pre-COVID, while a volume remain low, so means volatility has gone down. Of course, that has not increased, that has gone down in most commodities. Few months, open interest remains what it was even 2, 3, 4 years back in most of the commodities, and which I have mentioned earlier as well, that is a sign of the participation, that how much hedgers are using and how much oppositions are being built for a longer perspective. So that remains same. Because of reducing volatility and maybe the bearish price movement, we have seen participation going down a bit in most of the commodities, which we see slowly and gradually building up post-COVID. So this is one. A second, I think the important thing which connects the dot into this question as well, and you have also mentioned, sir, that the for the growth of derivatives market. In last 15 years, this market started in 2004. We were missing, the institutional participation, not the hedge funds, not the mutual funds, not the AIF, bank broking. No one was allowed. Even the international participants were not allowed to be part of commodities derivative space, which recently has been allowed. And I would link this to a very recent report, which I have mentioned in one of my another session as well, that there is one report, and I think that is very insightful for all of us. Is from Michelle Robb and John Robert, University of Illinois, where they have come up a finding basis commitment of trader report, which is being published by CME, which says commodities like corn and bean, which has millions tons of OI, the large chunk of OI, which is close to 70 to 80%, remains only with 197 participants. Only with 197 means open interest of 10 million ton, maximum remains with 197. And out of that total, there are 3,854 traders who were reported in the trading for the financial year. 25% of these traders contributes, the 80% of OI. If you see the participation, right, there are three huge group who contributes to the open interest. First is, of course, the hedge fund. Second is dealer and merchant, and third is index trader, and the commercial traders, which are considered to be, the hedgers. They have only 25 to 30% or 34% of open interest in case of corn I'm talking about. So even the hedgers have only 35%, but yes, index trader who have a 30% calendar spread position in the entire open interest and the index position. That is going, and that is something which has paved the way how this market has moved to the next level. Now in Indian market, funds have been allowed. Recently, we have seen one mutual funds participating in derivatives market. Bank broking have been allowed, AIF have been allowed, and portfolio management services have been allowed. And in the same line, exchanges are also coming up with index trading. So we have also launched one composite agri index. So I think that's missing piece are being plugged in by the regulator and by the exchanges. Hopefully, all this will create this ecosystem more comprehensive and maybe more liquid and strong in terms of participation. Thank you, sir.
Thanks, Kapil. There is one more question. I mean, you can't get away so fast and so soon. I think there's one more question for you. What is that you guys are doing to increase OI in options contract? That's the second question, I think, from the same gentleman.
Yeah. So options we have futures on futures 3 years back. We haven't seen, I would say, encouraging participation, and options, even the commodities market globally, have not been traded very actively anywhere. That's what we have understood, because a upfront premium of 3%, 4% has to be paid, and especially if you are doing long-term hedging, which is 4 months, 5 months in advance, then the premium moves to 10% and 12% upfront, and that's the cost to buy options. And that is something which is very typical for any kind of hedgers, which are mostly hedge against the underlying, to pay that kind of premium. Even on the writing side, because to be perceived unlimited risk, we haven't seen that writers coming up, especially the conventional player in the market, like maybe Prashant and Vipin can speak on that, their perspective being on the writing side of the market, because even in the international market, what I understand, none of the MNCs or international traders be on the writing side of the options, except few, or maybe only with the purpose of some speculative risk-based positions. So that is something. But yes, and there was little complexities. We have recently launched another options, which are options on goods in 3 commodities, which, unlike earlier options, will not convert into the futures position and directly will turn into derivatives. So that recently we have launched yesterday in 3 commodities. Few more commodities we have been planning for. And yes, I think the last thing is that the point which I have mentioned, that government or government agencies has to use this market mediated tool to ensure MSPs, and I think options is going to be one way a farmer can buy put option and lock their prices and manage their downward risk, and also get benefit of prices if they move up over and above MSP. So that is something which I think is being discussed aggressively at various level. Hopefully, if that comes, that will create a great amount of liquidity to the options market.
Thanks, Kapil. There is one question from little bit on the FPOs. I think Prashant has got some exposure in managing FPO. I don't know whether Vipin and his company has engaged with the FPO suppliers, but I think you can take, any one of you can take a stab at it. The question is, the FPOs are new suppliers. What the processors look for while they engage in direct procurement from farmers? So who amongst you is actually doing any FPO engagement at this point of time?
I think
Yeah,
Prashant is the right guy.
Okay,
yeah,
Prashant, so please
yeah.
take a stab at it.
We do. We are, we see direct procurement model or through FPO procurement model as the, two good business models coming for the crushers and industry. So there are two ways of doing it. Basically, one is farmer directly coming to the crush plant. The crush plant has very much determined all the quality parameters and every stuff, and that the farmer selling, and he gets credited in his account. The money gets credited in the account within, like, with less 24 hours or something like that. So another thing is the FPO aggregation that is coming. This is a new thing that has come up. A lot of FPOs which coming up and integrating with the crush plants. Basically, if we talk about one of the good area that I've seen the very much activities, Marathwada region of Maharashtra, a lot of FPOs that has come up. They aggregate the farmers and then linkage with the crush plants and everything. So this mechanism is also gaining a very much impact, and I see this as a very growing model, going model, because they act as payment stuff. There are different kinds of models that FPOs has developed for themselves as well, and link with the crush plants. So there are like three or four models. I would probably not in detail, but probably I would say they act as intermediary and good for the farmers, and they're extending their reach to the number of database of farmers. I've seen FPOs with 100,000 farmers, 200,000 farmers as well in the last 6 months.
Thanks, Prashant. It's indeed very heartening that the processors and crushers and the large format organizations are coming forward to support this initiative. That's needed. I think it's needed
Yeah.
unless and until the industry responds wholeheartedly to this initiative. The outcome of it cannot be experienced because essentially this is the only way where industry can directly participate and kind of I would not say eliminate, but right size the intermediation and establish a line of communication, because the intermediation is not on account of the financial intermediation alone. I think the intermediation is required to be eliminated for a communication which can augment the long-term capability of the entire supply chain ecosystem, starting from the farm level. And I think that's the future, because the I think the land holding problem of India or constraint cannot be resolved. So the only way is to talk to them collectively and help them collectively in such a fashion that they themselves are able to do something about their productivity and Atmanirbhar, as we all know it. Uh, there is next question. I think it can be taken by, I think, any one of you. It's an interesting question. This is a question is by from a gentleman called Aditya Sharma. Can we expect any dent on meal market by shift towards plant-based protein consumption in India for both animal and human consumption? It's an interesting thought that
Yeah.
who will eat the soya
Okay.
meal if the cattle doesn't eat it?
I think it's a very valid question, and I would like to think it in two time frames. One is what happens in immediate future, and one what potentially potentially can happen. Now, if we see all the alternate proteins, they are coming at a cost which is higher than the traditional sources of protein. So they are more taken either for their novelty value or the fact that people want to eat something like non-veg but from a vegetarian source, uh, the vegan fad. So right now it's more of experimental food, I would say, uh, and costs are way too high than the conventional proteins. But if you think, what there's a stage of evolution for each technology, and as technology mature, they change the shape drastically. If we look at IT, whether it's a laptop, computers, storage devices, or speed of internet, things have changed drastically in last 1 decade, and it's beyond our imagination. So nothing which prevents us to say that this will not happen in these alternate sources of protein. But since the technology in such a nascent stage, it's very difficult to pinpoint the inflection point. At what point of time it grows to a technology where your cost of production starts to go lower than conventional proteins. My sense is in India, this shift will not happen till the time we see cost of these alternate protein going below cost of conventional proteins, and difficult to put a time frame. Things can always surprise us with the speed they move as technology mature. But but to me, that should happen sometime. Difficult to pinpoint, but once you start achieving those economies of scale on production, the technology becomes that much more dependent. You will see that happening, but difficult to pinpoint when it will happen. So I would assume it will happen, but probably not in immediate future.
So I will complement to what optimism which Vipin has betrayed here to Mr. Aditya Sharma. I'm slightly more optimistic on that because all of us were skeptical about the electric car, electric vehicle. I think a decade back or even 6, 7 years back, till Elon Musk has come forward and changed the game for everybody. And we have seen the discussion that there will be in 10 years time US will possibly not have any private vehicles. Everything will move to the autonomous vehicle platform, as they call it, AVP kind of a thing, where there will be community or a group managed transportation systems, automatic grids and all that. And there are cities which are pumping in money like crazy. Pittsburgh has given a $2 billion grant to uh, that what is that institute in Pittsburgh? There's a famous Ivy League school there where they've given them by 2025. Pittsburgh wants to become a private vehicle free city, and everything has to be an autonomous vehicle. So my sense is that this question is going to catch momentum much faster than anyone of us can imagine, because it's actually the question of the carbon footprint, and it's a question of calorie efficiency. I mean, for feeding 2000 calories between veg and non-veg food, as 6, 7 billion people consume. So that 2000 or 2500 calorie delivery to an individual body, assuming that the world is getting the daily calories, I'm making an assumption which is the wrong assumption in this case, but we had to make some hypothesis that, so 7 billion people, 2000 calorie, and if we actually work backward, the amount of energy units that are spent to deliver that 2000 calorie every individual on a daily basis is anywhere between 70,000 to 150,000 calories. That is the energy efficiency of any agriculture based delivery of food. So I think the process of moving towards an energy efficient nutrition and food safety ecosystem is not very far, because the amount of energy it's going to save, the kind of investments it will be able to afford, is right now looking difficult. But I think it is very much within the logical reach of the people who are looking at the planet in a more sustainable fashion, and who are looking at these equations that how much units of energy would you like to commit to deliver 1 calorie of energy to an individual's, I would call subsistence system. So I think the both of us are in the same direction. I think our rate of expectation is a bit different. Vipin is
My rate of expectation is probably clouded by the fear, you know. Yeah, yeah, you suddenly get the feeling that every one of us will become redundant if the change happens in next 2 3 years, and that is what probably blocks our senses to sense it correctly.
so I think I would just share my assessment on that. I think the things that we fear most happen fastest.
Yeah, so we'll have to start looking for alternate job or retirement soon.
Exactly. So there is one more question. I think one of you can take us, because you're part of the global supply chains from farm to fork. How traceability and sustainability are important for the industry, and what the industry is doing about that.
Prashant, you'd like to take that?
That's right. Uh, for me, like traceability, one first example that I'll give you is on the documents and the digitization on the world, probably and an import flow basically. if you have an import documents coming from Brazil, Argentina to India, and if all the stakeholders with the digital can trace all these documents with terms of blockchain or any other methodologies, it saves a lot of cost. It saves a lot of as from the financial banking perspective. It is one of the best. It provides a very comfortable thing in terms of any disruptions or any other unforeseen circumstances. So traceability, not only on the documents but also on the entire supply chain, will give a beneficial to both the consumer. Probably at some point of time, someone sitting in Delhi would like to know what is eating, where it is manufactured, where that has come from, where that has, what is that level of consciousness, or should probably be not be ignoring that in the coming days. So that by traceability would definitely come a very one of the important factors. I'll break sustainability as a different thing, because we are globally, if we are talking about everything, we are talking about sustainable platforms these days. If you're talking about a lot of and palm is a very good example, and a lot of issues and other stuff that comes on the sustainability part. So all the companies have sustainable goals as well these days, along with the normal goals. That itself indicates how sustainability has become a part of companies or the value chain participants. Yeah.
Thanks, Prashant. And I think that
Anupam, just to link the two questions,
sure.
there are companies, for example, they are trying to generate palm oil equivalent from yeast. So their claim to market is not only the cost; it's also about the sustainability and the traceability that these alternate chains would provide compared to the conventional chains. So that's where world would move. So it will be combination given by cost as well as the sustainability and traceability that the new system will provide.
I think that's right. The sustainability and traceability is something which is going to stay with us till we find a new planet. That's right. So I think that brings us to the close of the session, because I think we have taken all the questions and there I don't see any question pending. And I'm happy that all the panelists have been game enough to take all the questions. And it was a wonderful and a very insightful learning experience for me. I don't dabble into the supply chain on a daily basis. I'm more like an inside observer of these things while working for people like you, when we store commodities for you, and we come to know what you guys are doing and why you are doing. So that gives us some sense at some point of time. And I'm sure that the summary of the discussion that we've had today is that yes, we have had a bad 3 months or 4 months kind of
Sir.
yeah, yeah, Kapil.
Yeah. Excuse me, sir. Sir, just to interrupt. Means we haven't heard, the expert comment on the infrastructure side, how, it's going to be changed, like electric car we are seeing. What's your view on that, and how it's going to help the supply chain? Actually, that's the most important part of supply chain, improve level of infrastructure handling, and maybe the traceability is very much, connected to the kind of infrastructure through which everything is coming on. So what's your view on that, sir, in agri space?
Okay, thank you, Kapil, for using this opportunity to kind of corner me in, and I would be happy to be cornered on this. See, my sense is that there is enough and sufficient storage infrastructure in India. I don't think there is any paucity of storing any of these storable crops. I mean, India is close to around 300 million ton plus of the grains and pulses and sugar and fiber. And India is now, I don't know whether you guys have noticed that now horticulture and floriculture, and I mean the fruit and vegetables have actually surpassed in absolute tonnage over the storage crops sometime in 2016-17. And this has happened first time since India started doing any agriculture for last 5 or 6 or 7 millennia. So it is, I would say, I would call it a millennial breach of threshold, where the horticulture crops have actually gone ahead of the storable crops. And if you see, the reason of that happening is that number one, the demand has been growing. I mean, the Indian people, whatever money that they had been in, the earnings that were improving, they were improving their kitchen purchase, and they were their grocery basket with the more enriched and nutrition rich foods, which is essentially fruits and vegetables. And because the market prices supported that, the production system responded. I mean, it was we were at almost less than 25-30% at the time of independence. Whatever was our storable crop, our horticulture was 25-30%. Now it is more than that. And without any subsidy, without any MSP regime, this ecosystem of 162 million hectares that responded without any, because there is no new land. Whatever production system, whatever production has happened in both the categories is on account of the market based incentive, which is pricing and better consumption profile. So my sense is that there is no paucity of the storage space. There's sufficient, and if the market produces more marketable surplus, the storage capacity can become available without you even noticing the gap of any storage facility. That's what we experienced. Because I guess this give you a simple example which will make things even very clear to you. When this industry was born, sometime in 2004-5, an organized warehousing industry was born sometime in 2004-5 with the birth of exchanges, NCDX and NCX. At that point of time, India was producing close to around 235 million tons or less than that of the storable crops in 2005, even less than that. And the storage rates that NCML or some of our competition was paying for the infrastructure to hire at around 8 rupees to 12 rupees a square feet. And now in last 15 years, we have reached more than 300 million tons of the storable crops and more than 300 million tons of F&B crops. And yet the average storage rates have collapsed to 3 rupees, 4 rupees, 5 rupees. I think Vipin can check from his records that in 2005-6, they used to pay more than 100 rupees a ton for wheat, and now they're kind of scrambling with for 65 rupees a ton. And I think the same thing will happen with Prashant also. So you guys are paying almost two-thirds of the range that you used to pay for your own storage 10 years back, despite you guys having access to much larger production. So there is no paucity of the storage space. That's very clear. Now, coming to the traceability and sustainability, I would say that there is increasing awareness about that, and this FPO system, direct access to farming, and elimination of the APMs. I mean, it have its own pain points, it have its own issues. It's not going to be easy because you don't break 70 years of a system and then expect that no lashback or no upheaval will happen. It will happen. And in that process, it's a churn, because when you break the system, you know there will be consequences. But if the intent is right, and nobody wants to cheat on the purpose, I think this 1,000 kilogram per hectare for soybean, or 500 kilogram per hectare for lint, or for that matter, 2 tons per hectare for maize. India, if given a chance to do a kind of co-opting between production and consumption, and if we reach the world averages, India can actually shut down the farmland of many competing countries. That is the kind of potential, because believe you me, the number of what you call sunshine days, as you call it, DD heat units, as we call it in agronomy. India has the highest amount of DD heat units multiplied by the number of million hectares. If you do that kind of solar energy which comes, it is a matter of time that you manipulate that solar energy by using the right kind of inputs and the right kind of aggregation of farm level, sustainability, traceability, productivity, everything will happen. The purpose, I mean, the objective is to have the intent and the process and spirit of cooperation between the farm system and the consumption system, and it will happen. So there is no paucity of storage. Believe you me, you produce 2 times more and store it without any wastage. I hope that answers your question.
Yeah, thanks, sir.
So the summary of today's session is that we had a bad 4
So
months.
Anupam, are we looking at further?
Pardon?
Asking Anupam, are you looking at further lowering of storage charges?
Certainly, if the land prices go down, we will do it. So the summary of today's session is that 4 months were bad, but basically it was compounding of an existing bad situation, which was more on account of our own internal problems of the oil duty volatility and TRVs, and then the lack of, I would say, the committed customer segment of Indian meal. And that got compounded much more difficult way in last 4 months. And I think the positivity, as the practitioners see it, in my opinion, is at some point of time, the everything comes back to normal, and hopefully we're going to get a good crop. I think 12 million. I mean, the acreage that has gone up into soybean is much larger as compared to last year. And if everything holds good, I think we are looking for a good crop. And hopefully that the world commodity prices remain benign, not much volatility, which will give us some stay in the export market for meals. So there is an experience of the last 4 months, but I think that still does not deter us from being optimistic about future, looking at the abundant rains. And I think that brings us to close of it. I thank each one of you, Vipin, Prashant, the couple, for being so open and abundant in sharing your insights with all of us and the audience. I look forward to more such sessions to learn more from you guys on these aspects. And thank you, CI, for hosting this session for the benefit of one and all. Over to you, Kiki.
So I would just want to say a big thank you to all our esteemed panelists and the moderator for this very interesting discussion today. Also, the participants, there were initial technical glitches, but you all stayed with us, and we hope you found that session engaging and insightful. And we would please share your feedback. I'll share a feedback form for your feedback to us that will help us improve further. And I also take this opportunity to thank our sponsors, NCDX, IPF First, and Ulam, who are partners in the series of commodity webinars that we did. This one was in the series, and it was really very interesting and one of the best of the sessions that we had. But thank you once again for all your support. Thank you.
Thank you,
Thank you
Kiki.
so
Thank you,
much.
panelists,
Thank you
and
so
stay
much.
safe. Thank you. Bye-bye.
Thank you.
Thank you,
And
everyone.
thanks Anupam, for
Bye-bye.
being so humble.
Thank you so much. That was nice. Yeah, thank you so much. Bye-bye.
Thanks all.
Thanks, all.
Thanks a lot.
Thanks, guys.
Thanks,
Thank
colleague.
you.